Hello friends, welcome to my channel. This is Gaurav here. So today we are going to learn about the basic of stock markets. What are the segments in stock market you can invest in and when you should invest in those particular segments. So this video is targeted for the beginners or for the traders who want to explore the other segment. So let's start our session. So as I am from India, I would talk how the what are the segments in Indian market. The same stands true for the other market as well. They have the similar segments, but the indices, like for India, we have Nifty 50 as one of the indices. So that might differ country wise. Like for US, it's Nasdaq. For UK or for Europe, it's Dow and FTSE and other indexes are there. So we'll initially start by so this is a money control site and this is one of the most famous site in India if you want to be updated what's going on in the stock market business. So you'll get all the news around it, and you have this indices and global markets and other indicators to track how the market is behaving. So I'll go with this thing. So Indian market has a lot of indices. What I mean by indices is Nifty 50 is one of the indices where you have 50 stocks from the different sectors of Indian market. So different sector, I mean there are stock based on cement, based on infra, based on IT. So the top performing, the top worth stocks are listed in this Nifty 50. Why they created this indices is to you can't track like Indian market has close to 1500 to 2000 stock, so you can't track 2000 stock every day to predict okay how the Indian market is behaving. So they came up with an idea to take the top 50, to take the 50 stocks, top 2 or 3 from each sector, and that would give us the performance of each sector and how overall the India is performing on that particular day. So you can invest in this indices. The Nifty 50 is one of the popular indices people trade on, and Bank Nifty. So this contains all the share of banking industry. Similarly, we have Nifty IT. So we have all the shares of IT industry and so on and so forth. We have auto, we have goods and various other things. So most of the traders indices are Bank Nifty and Nifty 50. So I have the videos uploaded on how you can earn quick and easy money from Nifty 50 and Bank Nifty trading daily on intraday basis. If you trade perfectly, so you can earn 1:1 to 1:3 ratio in this Nifty 50 and Bank Nifty. So the fluctuations are quite high in these two indices. Now let's get back to the segments we have. So the first segment is equity. You have heard about it, like most of you have heard about it. What is equity? So equity, we have lot of stocks. The company, when it goes public, it shares, it sells some of its shares to the Indian market, and shareholder buy that particular share. So that's one of the way for a company to get money from the people. The other way is they is using the bank debt. They try to get a loan from a bank. So let's talk about one of the famous company, which is Infosys. It's an second largest IT company of India. So you can see Infosys last traded at 634.2 rupees. So if I want to buy a single share of Infosys, I have to pay this particular amount, and you can see an average day per 10 rupees fluctuation was made yesterday. So on 634 you will earn 10 rupees on a daily on day basis. On average it moves some 15 or 20, depends on that. But now the question is how much can you hold this share, how long? So you can hold it as long as the consumer, as long as the particular company exists. So if the company doesn't get bankrupt, you can keep on holding that share. Let's say Satyam was one of the biggest IT company in India. However, the bankruptcy came to Satyam, and so the stocks went out of this Indian share market. So that's a rare scenario. So Infosys is one of the good fundamental company that have over great revenue. You can see the revenue here, and even their market capital is quite good. So it's very rare scenario for this company to get bankrupt. So you can invest this. So what profit will you gain? So if I say Infosys was listed somewhere around 1990s, and it was listed at a price of 10, and it went till 1500, 1600 till it split it. So split it means the share was done 1/2. So for one share you will get two share of half the price. So that's why you see from around 12 1300 the share price is around 634. So now that's a huge profit. If I go over 5 months, let's say 5 months, so the share was around okay, let's go to max. So you can see back in 2002 the share was trading at 55 rupees, and if I see today's the highest price, which was around 747. So this was almost around 17 years after. You are getting almost 1400 profit. That's almost 14 times of your money. If you invest 1 lakh, you will get 14 lakhs after that. So that's a very great way to increase your money. So now it's the corona pandemic is going on, so that's why you will see a sharp fall from 782. The market has come, Infosys share has come to 636. So again it's gonna shoot. So so now what people do is people invest blindly invest in some of the share, or maybe blindly invest based on recommendation they get from any of the news channels, or maybe let's say for example from Money Control. There are a lot of recommendations. So I would say recommendations, okay, you can go for it. So you will get a decent of 10% return on a yearly basis if that share perform. But if you invest in equity, you can have a potential to get 50 to 60% year on year return if you invest on right share at the right time. So for that I have put some videos about how to trade in equity on a short term and a long term basis, how to select a share, and if you do follow that, you will get a lot of knowledge which will enable you to earn 50 to 60% of the profit. Okay. So now who should invest in this? Now if you have a lump sum amount of money, first of all I'll say, if you're a beginner, please invest in equity. Don't go to any other segment because they are way too risky. Equity is the safest investment you can have there out there in the market. It's as safe as mutual fund. Mutual fund also mostly do invest in equity. So yeah, and how much capital do you require for this? So I would say you would require a good amount of capital to invest in Infosys or any other stock, because if I say for one quantity you will get at 634, in which I am getting 10 rupee profit. Now this 10 rupee I'm not going to get every day. Sometimes the market's gonna be up, sometimes it's gonna be down, right? So if I look at 1 year graph, so if I look 1 year before, the market was the Infosys share was at 721. Now it's 634. Okay, there are some rare scenarios where it plumbs down so much because of the corona crisis. But if I look at price before that, it was 798. So from 721 to 798, you get 9% return on an yearly basis, on a normal average yearly basis, which I said. But if you have picked some of the share have went 200-300%. So if you know how to pick that share, you'll enable yourself to earn a great income. Now if you have 4 to 5 lakhs or maybe 10 lakhs to invest, then I'll suggest go and invest in equity. Now equity is a way to increase your revenue on a short to increase your income on a long-term basis. So that's about it, the equity market. Now let's come to other segment, which is derivatives. Now as the name suggests, the derivatives is something it's derived from equity, because equity is the main thing in the share market. Now what happened is derivative is the normal people don't have much of the capital to invest. You on a daily or an average working male or a female working group won't have 8 to 10 lakhs to invest, you know, because we don't have that much salary. On an average salary 7 to 8 lakhs. After that you have your spendings and stuff. uh, so we have derivative segment wherein you need a small amount to buy big quantities. Let's say for Infosys, if I buy 1200 quantities, let me open the calculator. So if the 634 price, and if I want to buy 1200 stocks of Infosys, so I have to have an amount of 7,60,000. That's a too big amount for me to invest. I won't have that much amount with me. If I have, then for sure I'll go with equity. But what if I have only 2 lakhs or 3 lakhs to invest? Then that's where come my future segment. So future is one of the part of derivatives, wherein, as the name suggests, you have to predict the future. Let's say Infosys is 634 and we have corona crisis, and somehow the situations are healing, so it may very well soon go to 700. Maybe in the next month it can go, in 15 days it can go to 700. So I'll predict in future that it will go to 700 and I'll earn a good amount of money. Now how will I do so? I'll explain you that. So this is Zerodha margin calculator. The margin are all near about same for all other brokerages. Zerodha is one of the best brokerages. If you want to open an account, you can open an account with Zerodha's or 5paisa. These two are the best discount brokerages in India we have. So I provided a link below in the description box. You can use that link to open an account. So exchange, I'll select NFO, which is future and options. I'll select product as a future and I'll put a symbol for Infosys. The symbol is INFI. Now you can see I have 3 items listed in the list box, which are of 30th April, 20th April and 25th March. So Indian market give you enough time to invest. Let's say if I invest on 30th April, so by 30th April I have to somehow square off my position. So position can be of any side. It can be on buy side, it can be on sell side. So I have to square off. I have to sell or buy all my stocks. So there are 2 ways you can trade. You can trade on the, if stock is going above, you can buy it. If stock is going below, like you can also trade when stock is going, the price of the stock is going below. So that process is called hedging or short sell, where you sell first and then when stock price dips, then you buy. So that's also one of the way you can earn. So I have a video about that. Do check out my videos for that short selling process. It's one of the most renowned process used by big investors to earn quick and easy money. It's one of the safest option, I'll say, out there to earn money. So okay, so Infosys, as I say, if you buy this 30th April, you have to sell on 30th April. It will automatically square off at 3:20 p.m. Whatever the status of your share is. If you are on a negative, if you are losing money, it will sell it. It won't wait for you. So I would recommend to always go for a month ahead. So let's say currently it's 18th of April, so I'll go and buy for 20th of May. So that's one of the strategy I have. Or you can do is you can buy off 30th April, and if you are having a good profit, then you get an option to convert it to other lots. So on the 30th April you'll get an option to take over that particular holding of your till 20th May, and so on and so forth. Okay. So and at a time you can buy in a quantity on a multiple of 1200. That means a single lot has a 1200 size, so either I can buy 1200 or 2400 and so on and so forth. So it should be in a multiple of 1200, so I can buy and sell it. So I can do anyway. So I will focus on buy because that's the simplest way to learn it. And if I click on add, so it will give me how much money do I need to buy this particular stock. So if I click on add, so you can see the total margin I required is 2,20,000. right? So in equity you need 7,60,000, however in future you need 2,20,000. It's almost, you know, 3 times the money you need in equity. So future you need quite a less amount. So that's one of the way you can invest. But remember my friend, so if the market conditions go against your will, so let's say if you buy a share and it start to fall, so you'll have a loss in a similar way. So for each rupee fluctuation of Infosys, so each rupee fluctuation of Infosys, I'll have a loss of 1200. And very soon, this money will get exhaust. It won't take much time to get exhaust this money. So at that point of time, your this brokerage will message you or will call you to pump in more money to keep holding this particular stock. If you don't pump in money, then it will automatically square off, because brokers are not going to pay for your losses if it goes below 2,20,000, right? So I'll recommend, if you know how to analyze the technical indices, then only you enter the future market. Otherwise, I'll say stay away from this future market. You're gonna incur a lot of losses into it. This I would say is for intermediate traders who have been trading for 5-6 months, who know how the price actions work and how the news affect the markets, and then you can trade it with this particular capital amount.